Thank you, Angel, and Heidi ho, everyone. Happy hump day to you. Yes, it is. Don't know how we get there so fast, but it is hump day. After today, we're on the other side, right? Downhill slide. Let's hope we're not on a downhill slide as far as our balances in our accounts are concerned today. Shouldn't be. Everything should be floating along okay, and hopefully you guys picked up a little bit from yesterday. No, Ash's trade went to target. Lovely trade, that one, on dollar Swissy. A couple of potential trades that I didn't take, but we did point them out to you. One was Aussie Cad, and the other was one that Jira picked out that I said I wouldn't take, and he went to target, or should have gone to target. I hope he traded it and didn't listen to me. And we'll go through those as well. We can have a look at that and, of course, what's upcoming. We are going to trade the pound breakout today. So let's get about that, shall we? Now, I'm going to trade it a little bit differently today. What we are going to do is trade the breakout of the 1.5 day range, which is pretty clear there. So we're going to put an entry 5 pips above this level. We're going to put our stop loss 3 pips below that level. And we're going to do a Vicky Verky or vice versa for the short. So I'll give you those levels if you want to follow it. And then I'll give you some take profit levels as well. Now, those of you who are here for the first time, welcome to you, first of all. Those of you who are here and haven't been aware of how we've been trading the Open of London session, which of course is based on the pound US dollar breaking out of its range. Now, that range is sometimes debatable. No, it's always debatable. Where is it? Is it the last 3 bars? Is it the last 5 bars? Is it the high of the range and the low of the range of the previous day or the previous 2 days? We've narrowed that down to the previous 2 days. And this time that coincides with the high and the low that you can see that I'm going to trade. So I'll give you the levels that I'm going to trade the breakout on. I'll give you the short first. Sell at 1.4103. Which, as I say, is 3 pips below the low of the low, below the low of the, yeah, you know what I'm talking about, so, of the range. And 1.4171 is the stop loss. So 1.4171. That gives us a risk in pip terms of 68 pips. Take profit all. This is not a TP1 or anything like that. Actually, I'll go with TP1 then target. TP1 is DR2. So daily resistance level number 2. I'll give you that level if you like. No, nothing off the table at that point. Stops to entry. Stops to break even at that point. And target will be 2.5 to 1. And that won't let me put that on there. That's a bugger. Should do. Target is 2.5 to 1. Okay, so that's the sell order. And the buy order is simply the reverse of that. So it'll be entering at 1.4171, stop loss 1.4103, TP1 will be DS2, and the stop loss to break even at that point, no money off the table, and the target is 2.5 to 1. Hope that all makes sense, but I will explain it a little bit further if necessary. So let's place the order. Now, again, for those of you here for the first time or witnessing this for the first time, this is completely and utterly trial test, right? So would suggest you either A, don't trade it, or B, place micro lots and not too many of them on this because it's completely unproven, right? So we're not suggesting this is a strategy to take into your repertoire. Righto, I've got a sell order at 1.4103. And the stop loss on that is at 1.4171. Okay, so that's in the market. And the buy will be the reverse of that, of course. New order, buy, stop at 1.4171. And the stop loss will be at 1.4103. Okay, why? Okay, I'll give you the whys. Scalper Joe, looking good, buddy. Wow. How hot is he? Maybe I could look that hot if I had a, what do you call those things? What do you call those things? So when you get old, it's hard. You see, you learn this new technology. If not effigy. My God, it'll come to me throughout the show, I'm sure. But I'm sure someone will tell me also. Let me catch up with those hellos. G'day, Paul P. How you doing? Hi, Subra. G'day, John. And g'day, Avatar. Thank you, Scalper Joe. Do you really look like that? Toned up like that? Awesome. I get off the track, don't I? Right, why? Why? Because we believe that a move in early London session will break a range. And again, where that range exists is debatable. This one, to me, is pretty clear. So we'll go with the high and the low of that range. Then we add 5 pips to the high. That's just to give us a little bit of breathing space. If we do get an equal high here, we shouldn't be taken into the trade. Same down here. If we do get an equal low, we shouldn't be taken into the short. And not at all good. Make me feel better. And the stop loss, for the obvious reasons, exactly the same thing. Now, why TP1 at Ds2 and Dr2? Because I've got a thing, right, that tells me when I'm trading intraday that price does not like to go outside of that area, this little area here between Dr2 and Ds2. So if that's to be the case, and this is not a genuine breakout, then I can't lose if I hit Dr2 or Ds2, and that's the whole point of my exercise here, is getting myself safe, which of course is very much a part of the way I trade. And I'll explain that to you with those 2 perfect trades that I said yesterday. Well, imperfect for me was euro dollar, or was it Aussie dollar? Euro dollar, I think. And the perfect one was Aussie Cad. And we'll point those out to you very shortly before Ash comes in. And don't forget, of course, it is gold day today, where we have the golden girl herself, Ainsley, popping in to say hi and giving us her opinion as to whether gold is indeed on a rant now or not. We shall see. Okay, so that kind of ties pound US dollar up for the day. We've got that sorted. Let's go and talk about those 2 trades from yesterday. And the first of them was euro dollar. Now, euro dollar was very clearly at a point of underneath the daily pivot, and the high of the day was sitting here. Now, as Jaira pointed out, and those of you who know the slingshot setups, that was very clearly a slingshot setup. Why so? Well, I'll give you a brief outline of that. Those of you who don't know the slingshot, when we're looking to trade long, we're looking for a resistance level, and we're looking to break out of that resistance level. And the signal that we get is an approach of what I call trade lines. They're not trend lines. Well, this one was both. And then a pullback away from it. That necessitates for us an entry above the bar that pulls back and a stop loss below the bar that pulls back. Now, I don't know how this formed, but I assume it went south before it went north. I think that was the case, actually. And the trade triggered. Now, pursuant to the rules of high SF, pursuant to the rules of my my intraday trading strategy, you've got to get out there. So that would have given you a absolutely perfect slingshot trade. Risk of 15 pips, reward of just about 27. If you let it stretch a little bit further, you would have got a 2-to-1 on risk to reward. Now, of course, the way we trade the slingshot won't give you the 2-to-1. It'll only give you probably 1-to-1 on that because we take profit early. Now, the reason that I didn't want to take the trade is I was trading into the high of the day without taking that first profit because there's no room for first profit there. And as I said to Jaira at the time, trading into the high of the day does not work for me at all. And I could try this 100 times and get knocked over probably 70 or 80, and that's just not good enough. So that's why I don't take that position. But that was a perfect trade for him, and I hope he took it. My opinion won't ever change because, well, ever is a very, very long time. But as I said yesterday, it hasn't worked for me many, many times in the past, trading into the high of the day. And yesterday, it would have worked wonderfully. And as I said, perfect exit up here as well. Exactly the same occurred on Aussie Cad, which was the trade that I gave you guys before we did leave the show. And we were looking to trade it long. And again, it did set up from a slingshot point of view. But again, this shows the strategy in its absolute best shape. And the reason why it does that is we were looking for a long to trade to the untested pivots, right? Or the untested daily pivot, in fact. And it's set up exactly the same. Well, not exactly the same structure, but again, an approach of a trade line to pull back away from that trade line. Entry here, risking about 10 pips, and your reward about 20 pips. Same thing. It's 2-to-1, which translates to 1-to-1 at the end of the day by the time you've taken your first profit. This one, you could easily have taken your first profit, so that would have been the way to go on Aussie Cad long. And of course, we have a longer term sell on this pair, and that was only ever going to be traded to that level there. So that shows you pretty much the strategy in its raw form. It doesn't get any better than that, because when we're trading 30-minute charts, we've got a target that is here. It's DR1 is today, not yesterday, but I think that was pretty much in the same vicinity as well. So if you want to take a mental picture of how the slingshot works, then that's pretty much how it works when you're trading on 30-minute charts. You only want that target there. Once it's done, it's done. Speaking of targets, Ash's trade, the dollar Swissy, hit target sometime today, I think it was. Well done, mate.
Thank you, buddy. Yeah, it worked out well, and I suppose now we need to see what the what the the reason behind that trade was because of the inflation data. So we'll see whether there is any follow through with the actual inflation data that comes out. I haven't looked at that.
I'm crying in my beer. If I had a beer, I'd be crying in my beer again for you.
For who? For Gyro? We didn't take the trade.
No.
Oh,
I'm going to shut up next. I'm not going to give you my opinion next time and see what happens.
Well, this is the thing. I mean,
the thing is, it's long term. It's not one trade. It's not two trades. It's what works. It's what works over time, and that has never worked for me over time. I've been hammered doing exactly that many times before.
Yeah, and you can never be right 100% of the time, and there has to be some kind of rule with this stuff as well that you've got to put in place, because as you say, over the course of 20 trades, then that that just doesn't work for you, the way that you trade. So you kind of have to stick with it, and it's difficult to say this time it's different, because it's just the kind of that's just the kind of mistake that I think most people will end up making, sort of saying this time is different. You have to have something in place where you say, look, this is what my research has told me, that over the course of 20 or 100 trades, this doesn't tend to work out. So I've got to follow that, because this isn't, if it was as simple as sort of looking at the charts and sort of, being able to change the rules every time, then this game would be so much easier. But you can't really do that. No, it's not, because nobody knows what's going to happen at any one time. Nobody can be sure about what's going to happen. All we can say is that the edge suggests that it's going to do this, and sometimes it works, and inevitably sometimes it doesn't.
100%. I mean, 100%. You're right. Not 100% of the time it works.
Yeah.
If you know what I mean.
So, right. So where we got? So, John, I took that safe in the market profit taken and left a little bit on to see what happens. Oh, nicely done, mate. Nicely done. Okay. Should we have a quick look at it, mate? Or have you still got some stuff?
No. I'm done. I've got the pound trade sets, and why 2.5 to 1? I didn't explain that, because the session that Ash and I did a couple of weeks ago, I think the main outcome of that was and it's not definitive by any stretch, but the sweet spot on taking profit seemed to be around about that level. So that's why I've got that target in place. And it is a target. It's all out at that point.
Yeah, and I suppose this is the the point with trying to get those targets is that again, you can't be sure that it's going to go beyond, or it's going to get to those targets, but over the course of many trades, that it tends to be the best place to do it.
Hey mate, did you see there's somebody in the room just a little bit more handsome than you and I?
There's probably a lot of people in the room more handsome than you and I.
Oh, no, come on, I doubt it.
Who's that?
Can't you see Scalper Joe up there?
Oh yes, mate. Yeah. I do like Scalper Joe's. What do they call those things?
Yeah, I said the same thing. Avatar.
That's right. Yeah. Yes. So he was on last week, actually, just giving us a bit of an idea of what his trade was doing, and he traded the dollar yen very successfly on the 2-minute chart, okay. Which was fantastic.
Give us a hoy, Scalper Joe, if you want to do that again, any old time.
Yeah. Well, he's. I think we can probably have a little session. I was thinking, I don't know if you're not around on Mondays, are you, Joe? But because we have Ainsley in today and Shukri in Tuesday and quiz on Thursday, so Monday's really the only time that we've got now for a little bit of general chatter. I would suggest, maybe.
Unless there's SFA happening.
Unless there's SFA happening, of course.
Oh, of course. Hi, guys.
Hello. Hi, Ainsley. How are you?
G'day,
Afternoon. It's been a very nice day in Sydney. I'm going well. How are you?
Yeah, really good.
If Scalper Joe wants to spend all 2 minutes trading a 2-minute chart, I think we can fit him in.
I think it might be longer than 2 minutes to explain exactly the signals he looks at. Yeah, no problem, Joe. It's not. It's only if you're free and you want to go through it. It's just interesting, I think, just to kind of hear what somebody else's approach is, and we don't really scalp, so or very rarely anyway, and we don't have a specific strategy for that. I'm just going to go really quickly through this dollar Swiss trade and talk about what might happen from here on in. So the entry was down on this horizontal level here, and with the stop loss at these lows here. So we had a really nice. I think it ended up being about a 2 to 1, but let's just have a look. I'm not exactly sure what it ended up being, but we can measure it like this. We got that. We got that. So that was our 1 to 1. Oh, it's actually slightly better. That was our 2 to 1. Near a 3 to 1. Let's call it in 2 3/4. John will probably let us know what it actually was, but it's about 2 3/4 to 1. So that's where we're at right now. Now the question is, what happens from here, and what could happen? So I came out at first target. But because that, that was the point that I saw as a potential resistance area that it could start to change direction. But there is a lot more that this could do. This could go right up to 0.908, or it could go to this trend line. So there's a couple of potential ways that this could go. Now, what's lovely about this is that there appears to be a pretty nice trend, and it makes it a lot easier when there's a nice trend, when you see this series of high highs and high lows, because the stop placement becomes simple, relatively simple. So right now, I don't know how you're trading this, John, but if I was still in this, I'd be just shoving my stop under this level now, because which might well be, it's going to be slightly better than break even, isn't it, on that second half? Yeah, you could probably move them up a little bit higher, mate. I mean, by all means, leave those stops at entry. But there's probably a couple more pips that you could probably be relatively secure with. You might want to move this trend line down so it actually touches that lower point, and that might leave you actually back at entry. If you just want to give it that little bit more room. But as I say, this is really nice because you got that higher low scenario going on. As soon as it broke through this high, it puts the structure at this low, which means that anything kind of under that level should be relatively either safe, or if it penetrates, it will potentially change direction. The big problem, of course, is that the reason that I took this trade as an entry was because of the inflation picture, and that means that this inflation number might actually create some high volatility and possibly some spikes, which could take you out and then go. So picking the correct stop loss at this point is it's not a flip of the coin, absolutely, but you might end up just getting kind of taken out and it's still going in your direction. But you just got to follow the rules of where your stop loss will go. Cool, mate. Then yeah, leave it at entry. Then why not? So with the CPI data, that's going to be at 130. Now, the reason that I think this is important is that it suggests that when or if equities push into a level of support or resistance, they will probably more likely hold. So we've seen a pretty good little bounce in the FTSE this morning, and even though I wouldn't really be too comfortable about going short on the FTSE, the daily pivot is much more likely to hold when you have that the driver, the thing that drove the market down, still unresolved. So until that's resolved, I don't know whether we're going to move out of this range. So it's probably a bit of a range trader's paradise in some respects, because popping up to the daily pivot, you're much more likely to be able to sell it off and make a profit. If it comes down to the monthly pivot, then there's a buy in the market, but you don't have long. I mean, it's 8 o'clock, so about 5 hours away from that. And is it going to move up here, down here, up here, down here, up here, down here multiple times within 5 hours? Probably not. And it might not even move from here all the way down here, but it would suggest it's probably going to be caged. But again, CPI data might just create a little bit of volatility that pops it slightly higher and then comes down and back into the range. But I think we're staying within this price point for the next 5 hours personally. Not my personal, not my game really, to want to kind of like play the range in here. Obviously, if you see something, then and it's on, then that's absolutely fine. But I'd prefer to kind of get a sense of direction and see if we're going to go there. Market's looking just a little bit heavy, but I think it's interesting that you're in today, actually, because it does seem to be much more of a focus on CPI and inflation. And the other thing with that is that we've seen the dollar actually pop. And I looked at gold yesterday as well, and obviously gold was in pretty nice position for most of the last couple of days, but it's just started to ease down. This bar I thought was quite interesting. It really did move down at some pace, but then it's recovered quite nicely to keep structure. And this is really what I'm talking about with that dollar Swiss. This could happen. It could pop out, take your stop out, and then still keep structure. So where the structure for gold right now is saying upside. And again, this is the same as the FTSE in many respects. With price down here, I would be much more inclined to say this is a buy zone that could be taken before that CPI data is released. And then if you can get into safety, then you can kind of, get your stops at break even, and then see if the data actually helps things out, because we don't know what the release is going to be. And this is one of the reasons that we can never really know what direction the market is going to go in. We know this is the probable catalyst. CPI and core CPI is the probable catalyst for what we've seen over the last day or so, amongst other things, but one of the main drivers, which means that not knowing that number until it's released, we don't know what direction we should be going in. And you're going to be much more comfortable, as John probably is now, if you've already entered the market and you can manage something, because if that number is positive for a trade, then you don't have to do anything. You can just ignore it. And I think it's great that you've still got something on the table, John. And maybe I should have done the same thing, but I didn't split my trades up. I entered once and I set my target, so I didn't have to watch it. But I think it would have been a good idea actually just to leave something on the table and see if that news and data helps things out, because that's the kind of thing you need to kind of get a nice fast bit of profit coming in. Now, whether that actually changes the trend in the dollar is the big question, and that will probably be dependent on, firstly, how different the number is to forecast, but more importantly, previous. So we're looking at CPI data of 0.3% on the core and 0.6% on the general CPI data. So, does it beat? Firstly, is it a significant beat? And secondly, what is it within the CPI that is driving those prices more than other things? Is it food? Is it energy? Is it travel? Is it transport? And is it just general commodities, which of course it is. We all know that. But which other parts of the industry is it really starting to affect? Because that will probably also have a heavy bearing on whether we see the dollar significantly strengthen or not, because there are some areas of the economy that are not. It's no different than when we look at the weekly average earnings numbers. If the average earnings numbers start to grow, and we see those we see inflation, if you like, in the earnings, then the central bank of whichever country that those numbers are printed on, and we are talking about the States, but the central bank of the States are going to be a lot more comfortable being able to raise interest rates or start tapering. But until that happens, then they've got a bit of a juggling act on their hands, and inevitably the stars won't all align most of the time. They might do. I'll be so shocked if they get out of this one. The hole that has been dug by the global banking system and governments is so deep. And they do have strategies. There's no doubt about it. It's not like they're just going, I don't know what we're going to do. They know what they're going to do. They know what they're hoping is going to happen, and they will have a plan A, B, and C.
I can tell you that Australia's learned from the US.
What way?
Well, we just committed to borrowing a whole lot more money.
Right.
Really?
Yeah.
Really?
Yeah. I mean, do you know what? I mean, Australia's not in any way near the same issue that the States and the UK. I was looking at the pound yesterday, debt to GDP.
No, that's
over
true.
100%.
But we're now starting to talk in trillions again, rather than billions.
Right.
If inflation doesn't happen, then that becomes 2 trillion rather than 1 trillion pretty fast.
Yeah.
And I don't know.
They're
trying to spend their way out of trouble here. And
of course they are. And
I don't agree with
Do you know what the most concerning thing with all this is that and you may know this better than I do, but have we ever had a shock followed by like a serious shock followed by a serious shock within a short period of time, within the point where the bull run started. Again, I'm not talking about when it just keeps coming down, but when the bull run started, have we had a shock followed by a shock? Because what's happened here is that we've had that massive move to the downside. All the governments are trying to spend their way out of trouble, and so far it's worked because economies are growing. But what if it doesn't? What if we have another one that just goes bang? We got, and there's always something in the world. We know that, and I know that.
Yeah, what about COVID-20 and COVID-21?
Yeah, well, what if it's not even COVID? What if it's the situation in Gaza spilling over? What if it's a situation between
Climate
India
change,
and China?
World wars.
Exactly, mate.
Wars are good for the economy, but there's so much can go wrong. And look,
exactly.
I know I'm an old fuddy-duddy, and they call me granddad and all the rest of it. And to a certain degree, that's sorry.
Your grandchildren call you granddad.
Oh no! Don't curse me with them. The little monsters.
Yeah.
No, it's just, I don't know, and it is old-fashioned, I know, but at the end of the day, if you spend the money that you've got in your pocket, you can't get behind. But if you spend the money that someone else has given you, you've got a real issue if something goes wrong. And look, nothing's gone wrong.
I have to say, mate, that doesn't sound old-fashioned to me. That sounds like sound economics, and I think it's all too easy to kind of suggest that the best way to do it is an old-fashioned way, because it's the best way to do. It's obvious, isn't it? If you make £1 more than you are spending, then you're in good shape. If you're spending £1. If you're making £1 less than you're spending, then you're in then you're walking a tightrope. And I suppose that's my point, is that the US and the UK.
I fell off that tightrope when I was young,
right?
Because I was earning $600 a week in 1975, I think. 1979.
Yeah,
1979. I was earning $600 a week, and I was going to the racetrack and gambling about $2,500 a week.
Right.
Now you know why I'm a conservative trader, right?
yeah.
Because I had to sell my brand new Toyota Celica, which I cried about, and since that point, that was to pay my debts.
Oh, what a great learning for you, though, mate. I mean,
absolutely, it was.
Yeah.
And I haven't backed a racehorse since, slow or fast.
Yeah.
And as you know, they were all slow when I was betting. But that was my lesson. My lesson was, if I didn't stay within my confines, aka my wage, forget rent, forget bloody food and stuff like that, and booze, which was obviously a very, very important part of my life in those days. I just, what am I going to do now? 12 months down the track, I've got a motor car. It was my only asset. It was a nice brand new motor car, but it didn't last long.
No,
and that's the point I'm trying to make.
Yeah, but a good age to do it, and I'd say a good age to do it on two fronts. Firstly, you can recover, and secondly, you must have had a good time.
It was fun. It was fun.
That's the lesson, Ash. Way to
go. So where are we? So what do you think about this, Ainsley? We're just talking about the inflation here, and I'm really interested to get your take on gold, because I still think it's not a zero-sum game. Inflation picking up, and you got bond yields kind of picking up, which means that the dollar is spiking. Does that harm the case for gold, or are we just going, what, gold is still going to do well regardless of what happens here with the inflation data and the dollar?
I'm going to go with that. You've got some slightly more volatile markets happening at the moment, and gold's one of those nice conservative, sit in the background. I mean, we had it lovely. I think it was the most exciting Friday night I've had in ages, is when that was the worst NFPs report out. I mean, that's just saying a lot on another level, but we won't go there. But NFPs being the worst that's been, the jobs report, really, gold just took off. It just picked up and went. But as we expected, it was just going to absorb all that information, and it's gone sideways.
Yeah.
Since we've had that spike. Now, as you pointed out, neatly sideways. And that's what I like about gold. It's neat. It stays within its little box, has a little throw out, gets rid of some of the shorts and the longs and the stops, and clears the deck, and she just sits there.
Well,
and then ready to go again. Now, inflation-wise, those bond yields, yes, we had a little bit of a spike, but as the CPI is that the annualized CPI rate is 2.6%. Real yields rates are negative, which is why gold is going to sit tight for the time being. So we had that sell-off for the last couple of nights on the S&P and in the equities market, and gold followed it a little to start with, and then she just drifted sideways.
So let's just for everybody in the room, so people understand what we mean when we say real yields and bond yields. Let's break that down. So bond
inverse
yields
relation. So while you're saying that the yields on the 10-year are spiking, so when there's an increase in the bond yields, gold drops.
Yeah.
However, what you need to take into consideration is not just the bond yields, you need to add in the CPI. So if the bond yield is 1.8 and CPI is 2.6, you still have to deduct that 2.6 from the 1.8. Your yields are still negative. So gold will hold its own.
Yeah.
The other relationship that has been a traditional relationship is if the S&P has increased or is falling, then gold should increase. And if the S&P is increased, then gold should be falling. Now, S&P has just been going, and we've had a really ordinary time with gold this year. However, when we had a bit of a sell-off, the correlations are just not as tight and as firm as they were. But yeah, what we've seen here is we're seeing that sell-off on the S&P. It's bounced now this afternoon. I'm just noticing that it's had a little bit of a bounce. It's come off the 200 simple moving average on, I think that's my 4-hourly chart. Yes, on the 4-hourly, and had a little bit of a bounce there. And what have you got here is you got just gold going sideways for a little bit, and that's okay.
Yeah,
that's okay. And like I said, we've got that. You're on a weekly chart there. That's got to be yes. That's really sad that I actually can just look. I can look at a screen and go, "That's a weekly gold chart." That's sad. So now we've got this channel, and it had broken out of that channel after the double bottom, a lower high, and then sort of scratched around at the top of another channel line that I had. But you can see it's just coming up to that trend line that you've just put in there, Ash, and it's just, will it keep going? If it breaks that, and then we have a retest of that level, and she's gone again. But I think she'll just sit between 1830 and 1850 for a little while until some of these other markets settle down. And just to your point, Jeff, when you don't, these governments, and yeah, you look at the budget that came down last night, you just go, oh dear Lord, I mean, how are they going to pay that back? But
that's what I was talking about.
Yeah. But you just need to remember, unlike countries like Russia and China, these guys don't have to worry about it for another, couple of years. Or when's the election? Later on this year. But a lot of them only worry about what's going to happen at the end of their term. They don't necessarily consider past that. It becomes somebody else's problem, especially if they don't get re-elected.
Especially our well, I call them monsters, grandchildren. They've got a real issue.
Oh gosh, yeah.
Oh, look.
Yeah, go on.
Yeah, I was just going to say, do you know what? It probably isn't any different from when we were younger.
Do you know what? I don't know if that's the case. I mean, I think that my dad's generation was probably the golden age.
Requirements, different demands, different, hey, we thought it was pretty special when there was seatbelts in the back seat and a wind-up window, right?
You know what the difference was? You know what the difference was, eh? The difference in our parents' generations and our grandparents' generations was they had needs on this side, wants on that side, and the wants were down there. The needs were up here.
Oh, the priorities, different priorities.
Now it's like that. It's all about the wants, not the needs.
Yeah, and feeding that is obviously the dangerous animal. Feeding
absolutely.
The wants and the priorities become blurred. I think it's probably the best way to do it. But what I'm seeing here with gold is a move up and it's steady. Now, obviously, for me, I couldn't put a trade call out or anything like that on gold ahead of the NFPs because it was such an unknown quantity. I it went up, it was great, it's fine, but look what it's happened, what it's done since Friday 10:30 Sydney time, and it's just gone. So what happens with the S&P with the talk of the equities market having a sell-off in the next couple of days ish, or this week or early next week or whatever? What will happen to gold? Don't know. So
well, let me I'm going to just take you through a couple of things that I've been thinking about recently. John's just saying late in the 70s, UK was a nightmare. Everybody was on strike, and the UK government has. And again, I'd agree with that as well. But it's one of those things that, yes, there is the decade within the kind of golden era, if you like, which was a bit sticky. But I would say the 50s was pretty booming. The 60s looks pretty good. 70s, okay, fine. But the 80s started picking up, and the 90s was good as well. So I don't know. I would say that my dad's generation had it pretty good, because there was just, the world was just opening then as well. There was air travel was starting to pick up, and I just think it was a really exciting time to probably live through. Let me just have a quick look at this, though. I mean, it might just be an opinion. I don't know, but when I think about the debt that the governments now carry, things do appear to be in balance. Now, I'm looking at this potentially, and this is what I'd like to see, and this is what I always want to see. But this would be the ideal scenario for me with gold, is that it pops up, comes back, and then what do I have? My favorite pattern. So if I get that on the trend line, which means that there's so much time to kind of to get into this. But trading in this area here,
there's Head and Shoulders, and away we go.
That's what I'd like. That's what I'd like to see. Head and shoulders, inverted head and shoulders, right along the trend line. Which means it's this is a weekly chart, so it could be that gold, if this was to play out, gold actually does start to rally during its seasonal bias. Around about the sort of July time, which would be fantastic. So this is a sell zone for me. Now, that doesn't mean I think it's going to sell off. It just means that I don't want to buy it. So I want it to break through and get back into a buy zone, which would be the same price, but after a pullback. So that's what I'm looking for, to see that inverted head and shoulders. And if that happened, then I'd add to the position that I've already got. Now, the other thing.
Sorry, I was just saying, as you know, I'm a longer term trader, so I'm just been slowly adding at a juncture, and I'll hold.
Yeah, well, and I think that's a really good idea. I mean, I don't think I'm not as exposed to gold as I'd like to be, if I'm honest, because I was waiting for 1500 for my last bits, but that looks like a distant, but yeah, it's a distant possibility now. But I will get reinvested. I will put the final part of what I've allocated probably on pullback. And again, if it doesn't go, no big deal. I've got enough on it. It's okay. But let's talk about the S&P, because you mentioned the S&P. What I find interesting about the S&P, and we were just talking about the bond yield. Yeah, I agree with you, John. That's exactly the point. They're kicking it down the road, and it will come back.
Yeah.
So this is what we were just talking about with the bond yield, and just to kind of go into this in the detail. So CPI is inflation. That's one of the reads of not the only, but one of the reasons of inflation. Now, if inflation or CPI sits, and this is what Ainsley was saying, sits at 2.6%, that means the price of goods are growing by 2.6% each year. So that means that if you have $1, that is going to be backed over here by the we talked about the 10-year bond yield, and the 10-year bond yield is paying 1. What did you say? You said it's about 1.6, yeah. Isn't it right now? You said 1.8, so we'll go with 1.8.
1.8 yesterday. Was
it? Oh gosh, it jumped more than I thought. Okay, so 1.8. So that's at 1.8%. So that means that if I put $1 in here, then that dollar, let's say in a year's time, will be worth 1.8% more than it is today. In 1 year's time, it'd be worth 1.8% more than it is today. However, prices are 2.6% higher. So it means I am actually down by 0.8% on my dollar. So when Ainsley says that that the real rate is actually negative, that's what she means, is that this is actually a negative 0.8% until this yield overtakes the CPI inflation number, and that's the case for gold. That's what we're saying, isn't it, eh?
Yeah, and you're right. It's 1.613.
1.613. Okay. Yeah. Do you know what? I thought it was around there, but I didn't look. So I was thinking that's a hell of a pop.
Yeah. Sorry about that.
No, that's okay. It's all right. No problem at all. So 1.6%. We're going to call it. So actually, we're even worse off. I'm not sure. I'm not sure of the CPI number. To be honest,
that is right.
That's right. Okay.
Is right.
All right. So we're gonna say that's the inflation number. So that means we're down by 1%, negative 1%, every negative 1%. So every dollar is now worth 10 cents. 1 cent less than it was in a year's time. So yeah. So it's buying slightly less and slightly less and slightly less. So it's eroding, which means that inflation is there, and it is exceeding the savings inflation, if you like, and that is a good case for gold because it is a hedge against inflation.
Correct.
So that's that. Now, the other thing I wanted to mention was the S&P, because the S&P is currently sitting at, and I'm probably going to get this number wrong, but I'm going to say 4,400. I don't know where's the S&P.
Yep, you're wrong.
I'm wrong. It's about 4,150, right?
414765.
Okay, so we're going to go with that, and we're going to say that PE is probably going to get this wrong as well, but I'm going to say 35. I'm going to wait for you to tell me if that's right or wrong, but I'm going to say for right now 35. Okay, which means that the price of all of the stocks in the S&P versus how much they earn would take 35 years to pay back the amount that you invest on their earnings. So if you buy them for $1 and they are earning, the price of them is $1 and they are earning I can't even think what it would be, but it'd be 35. It would take you 35 years to get that money back. So it's probably about 3. Let's call it 3 or 2.9 or something. They're earning 2.9. So it's going to take you 35 years to get your dollar back. That should be 2.9 to get your $35 back. Now, so to get your dollar back. Now, 35 on a PE is relatively high for the S&P. So the way that you can work out what you are prepared to pay for the S&P is by saying, where would PE need to be for this to be worthwhile me investing? Now, let's say you you think that PE no higher than 28. You want a PE of 28 on the S&P. no better investing. And we would take the assumption that the S&P is not going to increase its earnings. Now, of course, it will do, which is one thing that could change the PE, because it's either the price that needs to change or the earnings that needs to change. But I'm just going to do the thing here. So that means that if I've got in actual fact, let's find out what the earnings are. So okay, here's the earnings. So we got 4,150 divided by, so that's the price, divided by the ratio, sorry, which is going to give our earnings at 118. Now, if we assume that 118 is going to stay, you know, these are our earnings here. So the price is that, the earnings are that. Now, if we, which gives us the ratio of that. Now, if we want to lower this ratio, then we're going to need to lower this number, because we're going to assume that earnings are going to stay the same. So now, if I go 118 times, and we'll pick what we want the ratio to be. Let's say 28. Wouldn't be a bad number. Now that puts the S&P at 3320. Now, of course, there are other factors that could come into play here. Earnings are likely to continue to grow, and if we can continue to see PMI numbers and everything else growing, then those earnings will likely grow as well. But we got to kind of like figure out what our comfortable threshold's going to be. So let's go with 3,500 on the S&P for a PE ratio, which is going to start looking a bit more attractive again, and see where that leaves us. Now, this is not looking at the charts. It's just like working out just some basic maths on it. 3,500 is here. And look at that. I mean, that is that's pretty coarse maths that I've just done there, and obviously it won't line up exactly like that. But I do think that's quite interesting, that if we want to get a P ratio which is not overinflated, we do need to see the S&P down to somewhere, you know, near these numbers. Now, when it comes down to the CPI and the bond yields and everything else, that plays a part, because if the bond yields do start to increase sufficiently, then the S&P valuations are going to get they're going to get squeezed, because the bond yield is considered the risk-free return on your money. Now, if you're going to get a risk-free return of, let's say, 3%, that means an S&P company will have to get north of 3% relatively sufficiently for you to be comfortable wanting to invest in them. So this is where these P ratios do start to play a part, and this is why CPI data is so important, and the bond yield is so important. Oh, you're welcome. You're welcome, Joe. You off, are you, buddy? Have you entered which one? Oh, Jeff. Okay, sorry. Jeff's just telling us about the competition. There is a competition going on Facebook.
Pick the euro. Pick the euro. By the end of the
euro.
Week.
Okay. Well, what's the plan?
I don't know. Just bloody... No, it's pick the price of the euro at close of the week, according to, I think it's the bid price on which broker, can't remember, but that's not on Fusion. So according to the bid price on Fusion at close on Saturday morning, what will the price of the euro dollar be? That's the competition.
Okay.
And I don't know what the prize is, but I think it's probably to do with. No, I don't know what the prize is. I won't go there.
Okay. All right, mate. Okay.
I was going to say dinner at Ainsley's place, but
yeah.
That's good. That's good.
Well, that's
2 nights of dinner with my place.
that would be good, because that would involve an air ticket as well, which sounds like a very generous prize. if I won it. So we're looking at competition that's Jeff's posted in the room. So click on that. All you got to do is guess the closing price of the euro on Friday. Is that right?
Yep.
Guess the closing price of the euro on Friday. We could even have a little look. In fact,
you mean you want a hint as to where it's going to be?
Maybe we shouldn't do that. I don't know.
Yes, we should. Absolutely, we should. But
cool, Joe. Cool. Okay, mate. Do we want to have a hint? Should we have a hint?
Yeah, absolutely. Okay. Well, right. There's no hints. Nobody knows.
Nobody knows.
It's all about guesswork.
All right. Well, let's have a look at this then. So we're looking at the end of the week. So what will this particular bar look like at the end of the week? I'm going to, oh gosh, okay. Right, well, let's pick out some levels to start with. I think it's going to touch this level. I'm just going to go with a nice easy closing price here, mate. Now, the question is, do we believe that CPI data is going to strengthen the dollar? So I'm going to say this is going to hold. I'm going for 1.2088. You can put that in for me, mate.
Oh, so close to where I was. So close.
Oh, yeah? Is that what you got?
I'll go with 1.2066.
Okay, you write those both down, and we'll have a little competition amongst ourselves. Jara's going 1.2123. Oh, 21
handle. 121 handle. Okay.
121.23. Okay, gosh, we're all in this little area here then. Watch it down here by the end of Friday. Tell you what, it's another. And this CPI data is going to be really interesting actually, because if it does start to push the euro, you've got another pattern going on here. This head and shoulders pattern here. Which may well also play out. There's your neckline down there, which means that this could be down here by the end of May, possibly. It took quite a while to get this left shoulder, so it could take quite a while to come down there, but it's possible. I don't know. I mean, we all kind of, none of us particularly like the dollar, but I do keep going back to the fact that we are still comparing one dog of a currency with another one. So it might still strengthen, enough to kind of get ahead of the euro here.
Angel, sorry, just before you, Angel, can you post, or is it there? Might even be there. The competition link in YouTube. I'm not sure you can, but if you can, go hard, because there'll be people in there who aren't in the room who really need to be in this competition. Sorry,
No, I was just saying, this is what we were talking about last week, wasn't it, Ash? With the, it's really hard with the currencies just to get a direction and get some traction in one direction or the other.
Yeah, it's hard to get some follow through, I've got to tell you.
Yeah, really, really tricky. Especially, I hold my trades for a little bit longer. So for me, as you think you're going well in one direction, and then all of a sudden it turns around and reverses, and it's just like, well, that's just ordinary.
Yeah, last week I was smashing it on pound Swissy, smashing it. And fortunately, stops to break even, but they're gone. That's exactly what's going on, Yeah. Fortunately, I've got Aussie Cad short. That's looking pretty good.
That's good.
So what about anything else that we should really touch on? I suppose we should touch on oil as well, because that's going to be.
Have a look at oil. Oil's interesting. Because we had a big jump up over the weekend, and that was based on the fact that the US Colonial Pipeline got hacked.
Yes.
And it got closed down. But we've had a bit more of a push up today in the last 24 hours or so. And that was based on OPEC coming out and saying it's not quite that bad in India.
Oh, really?
Yeah, look, I don't even want to know who's listening to that, but apparently somebody decided that was, let's go with that rhetoric. And hey.
So what they're probably comparing it to, is that a per capita thing they're probably talking about, is it? Which is
quite
crazy.
Possibly. But Modi is also pushing ahead with a very large infrastructure rebuild. And that's and one of the reasons Saudi has come out and said it's not quite so bad. Obviously, they've just done a really big deal with India at a discounted price. India's just bought a huge amount of oil from Saudi to push this, to put this $1 trillion spending infrastructure in place. So he's pushing ahead with that. Some have said it is perhaps his timing is just a tad off and a little bit tone deaf to the fact that his country is just on its knees. Yeah, just on its knees. But, you know, at the end of the day, a big deal's gone through for oil. It's a supply and demand issue. The US have just gone, oh, whoopsies, somebody's been able to cyber hack our major pipeline. And as I said, you know, the other one was good old Boris saying, here are 12 countries you guys can go and visit now, which is great. Only 4 of those countries do have their borders still closed to the rest of the world. But hey, you can go visit these 12 countries. Small oversight, Boris, but that's good. But the overall thing with that is, hey, planes are starting to get back up in the air, even if you're only going to Portugal, right? You off to Portugal, Ash?
Do you know what? It's funny you should say about Portugal. My friend's just gone back to Portugal. He had an absolute nightmare trying to get out of the country.
Try Australia.
Yeah, well, do you know what? It cost him a lot of money to kind of get the specific test that you need, and I'm not sure whether people are aware of it, but summer holidays are going to be incredibly expensive because you got to spend £200 on getting a verified COVID test just before you fly. So it's. And I think that's for every, you know, if you got 4 people in your family, you know, you're spending sort of like near £1,000 even before you've paid for your flight and your hotels, like that.
And they're saying the flights to Portugal, because they've been identified as part of the green travel zone.
Yeah.
The flights to Portugal apparently have just gone through the roof as well. But it's one of the countries that you can visit and not have to quarantine on your return as long as you're fully vaccinated. So. The other 4 countries that they had were Australia, New Zealand, Singapore, and Brunei. And it's like, good luck getting in. Some of our residents can't even get in.
Oh, really?
Our citizens can't even get back into the country. So,
Soccer players can. Cricket players can.
Yeah, as long as they've been hanging out in the Maldives and or going via Doha. So,
Boris Johnson makes a lot of these mistakes, and it's funny actually. We just had an election over here, and his Tories wiped the floor with Labour. Really, he's a bit like Trump was when he kind of started. Not much sticks to him. Not much sticks to him.
Me, Ash. It just fascinates me. This guy Boris absolutely stuffed COVID completely.
Yeah.
In the beginning. And now that he's just done this mass vaccination, you've all got vaccinated. And all of a sudden it was just like, bang, okay. And through you went. But you can see the effects of all that positivity and jets back in the air and all that kind of stuff. OPEC downplay, and obviously OPEC the Saudis have downplayed that whole India disaster because, well, let's call it a conflict of interest, shall we? You know, and that's basically what it comes down to. The rest of the world is just saying, and our government has been talking about extending our borders won't be opening until next year, to which I'll tell you what, I had my first AstraZeneca shot on Saturday.
Oh, right.
Yeah.
I had mine on Monday. Did you get cooked?
How'd you feel?
I felt like shit the next day. Oh, sorry. SH12.
I was so tired. It was Mother's Day and I was so tired. I mean, it was an excuse to stay in bed, but my arm's actually still a little bit sore.
Same.
Just where it went in. So, but, you know, I'd rather that and everybody get it and we can move on and hopefully they have one less thing to worry about.
COVID-20 will be around then.
Yeah.
Version 2.3.
Well, it is. Yes, it seems to be mutating in some regard. But
see, we're full of bright spirits here. John's just put something in there that I read as well in the chat. What are we going to do, John? We're going to, if they can hack a pipeline, how safe are the nukes? Well,
yeah. Well, this is
Where do you
this
go
is the
to
thing.
from there, hey?
Well, yeah, exactly.
Bank accounts, all those sorts of things,
Well, they can do
Exactly.
that.
That's the world in which we live, isn't it?
Exactly, and there could be a shock, or there may not be a shock, and we just don't know. Which is why we just got to kind of just continue to trust what the charts are telling us, at this particular stage. But just
sorry, can you just pop up XCU USD?
Sure,
please.
And while you're doing that, Ash, because you're a multiple skiller, could you also retrace to what you just said about paying? Was it 200 quid to get out of the country to have a COVID test? Is there no free COVID testing in the UK?
Oh yes, yeah. So the COVID tests are free, but if you're going to travel, it's a different. You have to take a different test. If you're going to get on an airplane, it's a different test. It's more
okay.
Yeah,
so that suggests that the first one isn't reliable. Is that what we're saying?
Yeah, it kind of does suggest that. You're right, mate. Yeah, I think the first one is for the everyday person, and the second one is absolute. This thing is 100% kind of trustworthy. I guess that's what they're saying.
Because smell a rat.
Like a money
my friend who was trying to get out of the UK to go to Portugal had one of those other ones, and he got through two rounds of the immigration. And when he got through to the third round and he showed them that test, they were like, nah, that's not going to cut it. You got to do that test if you want to get out.
They used to do that in Bali. It's called
it might be. Yeah, it might be that the other test is more of a globally universally accepted one, and the other one's just an NHS one. I don't know.
Okay, benefit of the doubt. Bullshit, benefit of the doubt.
Yeah.
Sorry, I interrupted.
Yeah, there we go. XCU.
Also known as my shiny new friend. Copper.
Yes. Yeah.
Copper. Now, copper, I've been trying to, and I'm on the just trying to get Phil Horner from Fusion Markets on this to see if some of the students can trade it on the smaller accounts. Do not trade this. I know I've been talking about it, but it's something. Now because it's over $10,000 US a ton. Even if you put on half a lot, your spread's like $200. So I know I've been talking about it previously, but anybody, I'm not sure on some of the smaller accounts, you just won't have the margin to do this. But it's really a really interesting commodity and metal, and I think in time to come we're going to be able to, if you've got a larger account and you can trade it, it's really, really interesting. So we had a really big pullback on that, which we needed to have. After that was on Tuesday, I was looking for a pullback. It gave me one, all right. It was quite horrendous, but it's an interesting commodity because it's an interesting metal because it's going to be so integral in the transition to going green, getting away from fossil fuels. It's in everything. The more research I do on this, it really is fascinating. So. Those big moves that you saw you can see it jumped over the weekend. You can see Monday it jumped up and then pulled back, but though almost straight up was because China put huge trades through the London Metal Exchange on Thursday and Friday after they were on holidays Monday, Tuesday, Wednesday of last week, and then bang. The Chinese were putting big orders through. So that's going, the electric vehicles is just a tiny part of the whole copper story. You've got copper used in a lot of offshore rigs because it's corrosive. It's non-corrosive. It takes ages to corrode. It's used a lot there, hence the copper guttering on fancy schmancy houses. But refrigeration. There was another interesting report on the US electricity grid needs $10 trillion to be upgraded. It's close to failing, and they're just not that they'll spend it because they've just busily have given out a lot of money to everybody to put in the stock market or crypto for that matter. But yeah, it's an integral part of the transition to go green. So I think we're going to see it go higher. It's just a matter of how we can trade it on the smaller accounts, given the size of, given the cost of it per lot as it is. But yeah, interesting one to keep an eye on.
Yeah, keep us posted on what Phil Horner says about it, because yeah, as you say, it's a vertical.
It's just
what a crazy, yeah, absolutely crazy. Since the start of, when was that? That was 2020. Yeah, so within a year, it's more than doubled in price.
That's right.
Which for a commodity is, yeah, as you say, it's just astonishing, really. Okay, well, unless everybody's got anything else, should we wrap here? Have you got anything else, Jeff?
Yeah, I do. I think I pointed this out on Sunday to most people, but I just want to revisit it because I think it's something that we should all be interested in at the moment. It's one of the things that I do when I'm bored, frankly. And this one is all about let's wait and see. And I'm talking about the yen pairs in particular, Euro yen and Aussie yen. And Ash, you've been sorry?
The Euro yen and Aussie, the yen pairs. The yen's just sitting there going
what?
Yeah.
Sleeping lion.
Yeah,
getting ready to roar.
It actually isn't. It's been that's probably quite true, and I'm onto that, right? So I think we should be very, very aware that this is on the point of a big rally. I'll put it that way. And the reason I say that, I'm just going to show you two charts. Euro yen. Now, Euro yen has been rallying its socks off since December? November even. Good month that. Since November. So we've had 1, 2, 3, 4, 5, 6 months in a row where Euro yen has rallied off probably a double bottom, and I'm good with that. We've had phase 1, which was 4 candles, phase 2, which is 6 point something at the moment. I want you to do an exercise for me, guys. I want you to go back in time and tell me the last time that Euro yen rallied for 7 months in a row. And then go and do the same exercise for Aussie yen and tell me exactly the same story. How long since Aussie yen has rallied for 7 months in a row, rather? And you can answer that question tomorrow, and it should give you some insight as to why I'm bearish on both Euro yen and Aussie yen at the moment. And that's just one of the reasons. It's not the only reason. The other reason in this one, in particular, Aussie yen, and both Ash and I have been stalking this. I can't trade it yet. And this is the daily chart. I'd love to see it duck under here and then come back and retest that level. That would get me short. Really, really interested in that. Euro yen's probably very much the same story. But if you go through that exercise that I've just given you and then look at this chart, which is a very, very cute tweezer top at, in my humble opinion, a significant resistance level, because it has been both support and resistance. Not so much definitive on that chart, but if you go back a little bit further, you'll probably find that is the case. And don't forget, it's been rallying for 6 months in a row. Just have a look at that, guys, and answer the question tomorrow. And now you'll probably understand one reason why I'm bearish on both of those charts, but it's probably the same across all of yen pairs, I should imagine.
Well, let's do that then, mate. And let's get in early doors, and after we've done the pound trade, we'll talk about anything that might be setting up on the FTSE. But let's go a bit more into this before we get to the quiz.
Yeah, sure. Speaking of the pound trade, we're bang in the middle of the range, so no trade on that yet. Just waiting for that to break out. May not today. It may stay in that range, and that's fine. Don't mind.
Range that. I like that.
I will look at gold. You've tweaked my interest now, eh? Telling me it's going sideways. You know I'm a sideways sort of guy.
You are a sideways kind of guy. Yeah.
Awesome stuff. Okay, let's wrap it up there, and we will be back as always tomorrow. Thanks so much, Ainsley. There's a quiz tomorrow. If you are more than welcome to come in, and obviously everybody else is welcome to come in. There is no prize but pride. In fact, there is a prize. If you win the quiz, then you get to write next week's quiz if you choose to do so.
We're gonna have to hit the boss up for a prize, I think.
Hit him up for a prize.
Yeah,
we'll have a prize every week.
Ash.
Bottle of Maker's Mark.
Yeah, mate, a bottle of Maker's Mark. Yeah, I prefer that one. Okay, let's wrap it up.
A sharp haircut, looking sharp.
I went fun business.
Party on top.
Party on top, business on the side. All right, so let's not get too deeply into talking about my hair.
Whereas I just fell under the mower, right?
Exactly. And we will see you tomorrow. Thanks so much, guys. As always, thanks, Ainsley. Thanks, Jeff. Thanks, Angel. See you guys in the morning.
See you.
Cheers, guys. Bye-bye.